Markets are once again hit by a new threat of a new strain as it may hinder the global economic recovery. Stock indexes closed the week in negative territory. Even the US dollar, which is considered as a safe haven asset, lost its ground. In the middle of the previous trading week, the US dollar index, which measures its value against the basket of 6 major currencies, consolidated near the 16-month high, but returned to the opening level of 96 already on Friday. The US dollar was declining in parallel with a massive drop in the US Treasuries, which happened amid a possible introduction of COVID-19 restrictive measures. Thus, the greenback lost 0.25% against the euro. However, the single European currency is still holding near its lowest level since July 2020. This is due to the fact that some European countries have already reimposed lockdowns. Besides, investors believe that the Fed will soon decide on the interest rate hike, and at the same time, ECB President Christine Lagarde hinted last Thursday that the Eurozone monetary authorities may start reconsidering the monetary policy of the region. This statement encouraged traders and helped the euro-dollar pair to rebound from the early low. The British pound was the one to post the biggest losses. It lost 0.83% against the dollar over the past week. The pound-dollar pair hit the lowest level since December 2020. Market participants began to doubt that the Bank of England will tighten its monetary policy at the meeting in December. The head of the UK Central Bank maintained more moderate rhetoric and explained that the markets misunderstood his last statement about the risks of a premature rate hike. Investors seem to have taken this as a hint that the key rate will be raised. Meanwhile, the crypto market went bearish as well. The number one cryptocurrency eased by almost 10% last week and dropped below the level of $54,000 per token. Yet, Bitcoin still maintains its growth potential, and the current drop in value is attributed to a new virus strain and to the threat of restrictions. A slump in the oil quotes was quite steep as well. Brent crude tumbled by 7.5% by the end of the week and traded at $72.70 per barrel. Of course, new restrictions will affect global oil demand. In addition, the energy market is likely to see an oversupply in the first quarter of the next year due to the coordinated release of crude reserves by major oil importing countries. So we expect that the downtrend in oil will continue through the next week. As for gold, it closed last week with a loss of 3%. The precious metal dropped below the level of $1,800 per ounce. Some investors decided to sell gold in order to have cash for security in their position stocks and its inflationary expectations. You're watching weekly review of currency and commodity market. We wish you profitable deals.